Hey guys, I'm Shane Renard with Renard Realty Group, and I just wanted to cover a few things about the tax shelters for us real estate investors. First off, I want to talk about the TCJA, which stands for the Tax Cuts and Job Act of 2017. This was something that was rolled out by the Trump administration, and what this is quite simple. This new tax law gives us 20% deduction for our rental income to be immediately deducted right out of the gate. So talk to your accountant about that and benefit from it. So the second one is the investment in opportunity zones. So what the hell is an opportunity zone? Well, quite simple. It's something the state and the government has, the federal government has areas identified for low housing areas that need renovation. So the government gives a stipend to us real estate developers, investors to come in, buy homes, renovate them, and rent them out to the low to median income areas. And these are identified throughout the counties. Not every area is an opportunity zone, so definitely talk to your real estate expert in regards to that, your real estate attorney, your accountant, and your real estate and broker. So people will sometimes not even know about these opportunity zones, and you're buying something. Why not buy something and make a difference in the community and get a tax break on that? Now you're going to see about a 15% tax break on that. And then the next thing is when let's say you invest 100 grand on a property and you renovate it, and now it's worth 200 grand. You're only going to pay taxes on that 100 grand, not the 200. And any capital gains is clear. You don't get taxed above that. So if you end up selling it for 200 grand, you only get taxed on that 100 grand. So that's a great thing. Next, I want to talk about entities that help protect people. So if you're buying investment properties as a single person in your private name, stop doing that. Stop right now. Form an LLC and get protected. Whatever it may be, LLC, S Corp, corporation, get protected. Talk to your attorney and make sure you understand the different various types of legal entities and why each one might benefit you. You need to figure that out. It's going to help you a lot. I'm an LLC taxed as an S Corp. You all need to start doing this. So we're going to talk about capital gains, which is the increasing of the value of a property versus your income taxes. Okay. If you buy a single resident property and you live in it for less than 1 year and you sell it, you're going to have to pay tax capital gains based on your taxable income bracket. If you keep it for one year, 1 day, and you sell it, and you bought it for 80 and you sell it for 120, that's your gain that goes towards your income tax. That is not a capital gain that you're going to have to pay taxes on the capital gain. Does that make sense? So understand that stuff, okay? Because that is a huge savings, because it's anywhere from 0 to 20% that you'll pay, or 20 to 37%. So it's a big difference. So we're going to talk about depreciation deductions for improvements and also repairs. Now, improvements add value to the property, of course, and repairs return the property to its original condition. Okay, so with that being said, roof is a great repair. It's not increasing the value. Okay, if you need to repair something like patching a roof. Keep in mind is that you have to pay tax on the amount you save because of depreciation. The tax is known as depreciation recapturing. Depreciation recapturing is applied whether or not you make use of the depreciation, meaning that if you choose not to depreciate the cost of a purchase, you'll be taxed as if you have. So understand that with your tax accountant. I don't understand it fully. That's why I have a great tax accountant, and I just shoot off questions to them. So 1031 Starker Exchange, absolutely one of my favorites. And let me explain it to you in my words. 1031 is where I can go buy a property. Let's say I'm selling one of my investments, and let's say I'm selling it for 200 grand. Full 200 grand profit. I start a 1031 Starker with a fiduciary. I take that 200 grand and I dump it into that vehicle to hold it. I now have 45 days to identify a property and put it under contract at or greater value of that 200 grand. And then I have 180 days to close on it and take property ownership of it. Okay. You can do this as much as you want. It's totally legal. You won't be paying taxes on it, okay, because you're rolling it over into like-kind property, but it has to be at or greater value, okay? So you're always stepping up, all right? Now, you can depreciate it as long as you want. I think it's 7 or 8 years. I'll have to talk to my accountant, but you can depreciate on the property and the improvements. You can write down your legal fees. You can write down the memberships, if you have memberships, education, all sorts of stuff. Okay. And then transfers. Let's say you bought a property, got $500,000 stuck into it, and you depreciated it out over the years, and you can't depreciate it anymore. Well, you sell it, and now you got, let's say, 600,000. You can 1031 the money and not pay the taxes, or you can keep the property, not sell it, and trade it to another investor with like-kind property. That resets your depreciation clock. So now you can depreciate that property. You can do this as many times as you want. There's no law against that I know of. But please check with your tax accountant and your real estate attorney. I'm Shane Renard with Renard Realty Group, 920-606-4436. And I would love to chat with you guys about helping you buy and sell real estate. Take care.